The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 50th day of August, exact middle of the month, and let's just go straight to the nitty-gritties here. In the Chapman Wave methodology, remember, for subscribers to my opening call newsletter, daily news, I say daily because it's every single day of the week, and I try to make it almost every single day of the year, even when I'm on vacation. We'll see if I'm able to keep that up. Maybe not, but we'll see. These are not speculations. I don't say on the head of my newsletter or whatever it is that the Dow is going to 30,000, 40,000, 50,000. I'm a mega bull. I'm a mega bull in the sense that until I get all the signs of my socio-political, geopolitical, all those aspects together, where the Dow, just like in 1980s, when very few people noticed that Toyota, the Japanese car companies, were starting to make very reliable cars. And I remember yelling and screaming to my clients at the time, saying, "What is this with General Motors and Ford using plastic parts?" And the unions are running it, but the unions are as much to blame as the head of each company. Chrysler, Ford, General Motors. What's going on here? Can people not see that we're deteriorating in quality? And Japan started to improve and improve and improve at the same, this is really important, at the same time as the yen got stronger. So with our dollar getting stronger and with our I'm not sure how to phrase this. I'm going to go back to what I wrote back in 1987, where I wrote a very important article that was part of a book that was published. It's called The Psychology of Investing. My chapter's in there called the Mega Bull Market Still to Come. It was written in 1986, 87. Barron's, at first, the editor of Barron's had asked me and my partner at the time, "Yes, this sounds exciting. Go ahead, do whatever you can. We'd love to publish it." And then when it was so bullish, there was just no way they were going to publish it. And then, of course, there was the 87 crash. And on October the 19th, we had that 87. We had that massive smash to the downside. The very next day, I said to subscribers, and ironically enough, Fidelity had just become that summer a subscriber of mine, a client actually. I said, within 18 months, we should make an all-time high. So the dollar going stronger is starting to match the quality improvement in the United States on the technical side. That is, our automobiles are still way behind, but they're really improving. And I think that I discussed that the Cadillac, the pink Cadillac, well, once the game become the epitome, the iconic look of the United States, the pink Cadillac. And everybody thought, "Are you crazy?" And then remember, that was when they had already stopped making the convertible Cadillac. There was the last convertible Cadillac on the production line. So let's get out of that. What I wanted to say is, I'm looking at this and I'm saying, yes, we should be going down for a little while longer. Number one. Number two is that the whole mega bull cycle, I don't see anything here that has changed my thinking, other than the shorter term to maybe intermediate term. After we've been 7 months now, is going to the 7th month of the consolidation since the January highs of the Dow, the Nikkei, the Dow, the S&P, and the New York Stock Exchange. So this is really an important phase. We're getting in the last couple of months now of this consolidation. Good, got that out the way. The reason why I wanted to talk about it is that for subscribers, we put the money to work. There is nothing here that we're not being graded on what we say. I want to be graded by what we do. And that's just the way it is. So we are short from the Dow on the 28th of September of July, the day after that peak D high was made. We've added to the short the day after the 7th of August high of 25,692 in the Dow. Those are positions. That's not me saying, those are doing. There's a huge, huge, huge difference. So with that said, at 24,965, we were in leg B to the downside in the daily chart. You can see in this 120, let me just go day to day. I'm taking time today, lower lows and lower highs. Just for the moment, let's keep thinking that. Maybe I'm going to be wrong, but that's the way I'm looking at it. So the daily technicals, the MACD is still very weak. This is what I show my subscribers every day. The stochastic went from 64% quickly to 46%, and now it's at 29%. In one day, the change has gone 20% down from the 64 level to the 46, now from 46 to 29. Huge. So we're accelerating to the downside, and you can see 24,978 is the automated Chapman wave support level, and that support level has been taken out because we went to 24,965, just a little under it. So we're getting real close to some kind of a bounce. 120-minute chart ups, 100. Oh, look at that! I've got a Chapman wave trend gauge that's suggesting that within 2 sessions there should be an attempt at the S&P minis to go 9 to 11 points higher, which should help intraday for the down the S&P to rally, and then return to the sell mode. Okay, what we're looking at here in the 120-minute chart right there is that we've got this double arch formation like a lowercase m, and we've pierced this. I've never seen such a cluster of support levels. We've pierced that. The next one is 24,008. I can't see it. 899. And the 200-period moving average, the blue line in the 120-minute chart, is at 24,928. I'm going to take a little time now to explain something. In my Chapman Wave 5, there was a moment yesterday where I said, I'm not sure I've got it exactly right. I think it's correct, but I'm not sure. But now I am kind of sure. And the reason is we made a Chapman Wave 5 at a peak D. See that 5 that was made at 25,692 at a peak D at the top? Now we've come down at a trough D. We made a Chapman Wave 5. The only similarity to Elliott Wave is that there's a 5. It used to be a little bit, now it's not even close. So it has nothing to do with Elliott Wave other than 5. We went up to the X, and I decided that that, in fact, was a turnaround moment. And if that was correct, we should go 1 to the downside, 2 to the upside, 3 to the downside, 4 to the upside, and then 5 will see a stronger bounce. And that could be coming at the 200-period moving average to around about 24,950, 920. We're in 3 down right now. A trough F has been formed at this particular moment. Good, got that out the way. What I am looking at here is that until the MACD has stochastic signals, wow, the volatility, the trend gauge shot up to 3.5. So they're real close to some kind of a counter trend bounce.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Think of your chart formations as a series of arches and cups. That's really important. And if you're looking at the 2-minute E-mini, it went from a low in the 28.0403 area. What was that? 28.03, I believe it was. Rallies, goes to peak A, B, C, D. D is the 4th highest peak where you always want to be a little cautious. Pulls back, gives a down signal, pulls back to a trough B, and now it's trying once again to go back in the cup formation. So you went cup, arch, cup again. So this is a 2-minute chart, but the patterns are the same. As I go through these charts, you'll see exactly what I mean. Here we go. The Dow is, well, first of all, I got a question for a couple of days in a row about the world markets. So I quickly grabbed the Vanguard Total World Stock Market Index, and I went through this a number of times. And there were no mistakes here. There wasn't one in the comp index. You remember, I think it was the comp index where I said, I'm getting a C, something's wrong, or was the index? And then I realized I'd missed a peak by a fraction. So here we are. This is a peak C. There's no other way I can count it for the world total market. And that's saying to me, this is the time to be, you're going to have a couple of weeks. Get yourself in order to be able to pick the stocks that you really like, that you've been wanting for ages. You missed the big moves before. There's going to be another opportunity. That'll be the big opportunity, because look at this. It's gone sideways in a peak C since the January top. It went with the down the S&P. January all-time highs. Vanguard Total World Stock Index, VTWIX is the symbol for me. And it is the Vanguard Total World Stock Index. And I'm looking at it and saying, hey, this is actually quite good. Even if it had pulled back from the 152s to the 148s, even if it slipped underneath, it looks to me like it's going to try its very best to get to a D at some point. So let's keep that in mind. There's no guarantee, of course, but that's the way it looks. All right, enough. Here we go. Dow, IND. Dow is down 239, was down almost 330 earlier on. It went to a leg beat to the downside. There's that Chapman Wave Roman candle. I'll have to wait until Friday. Maybe I'll talk about it then. I don't want to take time right now. So the most important aspect is that in this particular instance, we still haven't been able to put a down arrow on the monthly chart, even though it's at a peak E with a Chapman Wave Roman candle. Everything about it just fitted exactly. But that MACD, for the first time today, is down -6 in the histogram. That is the first inkling of a down move. Now, the reason why I'm saying I don't want to say what's the downside in this particular instance, and the reason is that in my monthly charts, there are just too many P, D, E's, and even F's that I have to consider that there could be a deeper pullback if certain circumstances unfold. That's all I'm going to say. So all I want to do is to say we still have some longs. We've kind of raised cash. I don't want to get too carried away on the long side. We've got shorts. I've missed adding some shorts. I got a statement, not a question or anything, just a plain old statement from L saying, Baz, buy to cover all my SMH, QQQ, DIA, and IWM shorts. I cannot believe you did not get short IWM, QQQ, SMH 2 days ago. I bought the SMH, IWM, and QQQ at the open today. I got to respect that. Al's had some fantastic turnarounds, almost exact tops, exact bottoms. So I'm going to keep that in mind. But no, you know from my newsletter that we absolutely wanted those. We got stopped out of the SMHs for just like a few cents, and then it turned around. Hey, these things happen. The trend is, we've got the trend. We've identified the trend. We've traded the trend correctly for the Dow. I'm happy. Not as happy as I would have been under other circumstances, but I'm fine. So, okay. But a good statement there. I got to respect it. So here we go. The Dow, make it real simple, has already gone under 25,000 once now. It hasn't done it, hasn't closed under. It says 25,006. I'm looking at this and I'm looking at that weekly chart. It really looks like we're not going to make a new all-time high this week in the Dow. Sorry, a new recovery high above 25,692. This should turn into a peak E, and I suspect in August we'll be trading somewhere in the 24,800 to 24,600 area. I'm suspecting. I don't know. How can anybody know for sure? But everything about the daily, everything about the weekly so far is suggesting that there still is support in the weekly chart, but it is starting to, the technicals are starting to turn down. So that's the level. And on the upside, strong resistance in the 23,350 to 25,420 area. Good. S&P, let's just get this out of the way. A lot of questions just piling in there. S&P right now is down 27, down 0.96, down 0.91 down. The QQQ is down, if I can see it, way over there. QQQ down 1.4%. So this is now a peak F. I'm going to change that. I meant to change it yesterday. In the S&P, I don't know, I thought I had changed it. GAF, it's really like a rogue wave in a sense. That's Chapman wave, rogue wave, where everything's turning down. Suddenly one of the indicators moves higher with the price, but the others don't, and kapoop, it goes right down. And it's not yet taken out the low, and that's going to be important. For me, the S&P needs to crack and close any day this week. I'd like it this week, under 27.96, no, 27.95. All right, weekly chart peak E, just under the 28.72's all-time high at 28.62, 10 points lower. That's kind of how double tops are sometimes made. Watching this closely, we'll see what happens. So the parameters are resistance at 28.32 to 36, and key support, as I said, is about the 27.96 area. All right, QQQ, here we go. QQQs. I think we missed, I tried to get some short today, but we didn't get it. The Qs look to me like they're the last ones to turn over. So I've got a peak E, an arch formation in the Chapman wave. Remember the lowercase h? There's that H. It's a rather big arch. And we're coming down. Any close at 178.84, down 2.61 right now. Any close in the next few days below, I would put it even at 177. A close below that says, you know what? That 175.51 14-period exponential moving average in the weekly chart will be my target. And I'm wrong if there's a move into 182.30 anytime in the next 5 sessions. I just want to quickly see something here. The E-mini. Yep, there it goes. Leg D, just as we were discussing a moment ago. arches and cups and arches and cups. Those Ds are absolutely fantastic. Peak D, let's see what happens here in the 2-minute chart. Hasn't broken above the 5-minute for leg C. All right, let's get back to our story. That's the QQQs. The IWM. Now, the IWM had held very wrong chart. The IWM, the Russell 2000, had rallied right up to the Chapman Wave inside track repellent zone 3 times in the last 4 sessions up until today. Couldn't hold it. It just kept pulling back at a peak D. Peak D, remember, that's where you got to look for sharper turnarounds. And what did it do? It took out the key dash red line support, and now it's trading above that. That says to me that the weekly chart's absolutely imperative to monitor a close of the 164.50 in the next 3 to 4 sessions at the IWM. The Russell 2000 says, hey, watch out, you're going down. I'll be right back. Dow's down 220, S&P's down.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Just let me do this here, Peak C, and then it fails, huh? A, B, C, D. Okay. All right. In a moment, I'm going to look at Cimarex Energy trading at 82.75 down 326, and that is for Tim. But right now, let's just continue with our overview. Here we go. The IWM, as I said, has to hold that 165 area because going below that is going to be quite negative. In the weekly chart, it suggests it's going to retest the low of 162 that was made back, I think, in late June. All right, let's go on. And on the upside, a break into the 169s I have to be impressed with. So those are the parameters to watch. Now let's go to gold. Gold, which I've been talking about for months now, saying this chart is just not good at all. Well, lo and behold, it's now had another smash to the downside, down 17, 1182 in a trough G/C. In the weekly chart, and that monthly chart is really is at very important. Look at this, very important trend line support right here that goes all the way back to the high of September of 2011. I can't give you the price because this is a continuous contract, but it will be the very high. I've got 2017. Of course, it wasn't that. This gets smoothed out, so prices change. Dates and chart patterns are 100% correct, but the dates are different. I'm sorry, the price is different. And it's broken this key support. It looks to me like 1140 is really the monthly chart, 200 period exponential moving average that gold wants to test. But wait a minute. Remember yesterday? Day before maybe, we were looking at the left side, right side price time match. And what I'd said is 1170.10 is really very important. That's the very low. That's the week of the 23rd of December, 2016, 1173.10. Of course, the price would have been different, but it is the exact low. And now we are on the way there. There's a downtrend line that suggests if it takes that out, you've got to be real careful because 1153 would be the next level of support just based on the trend line. But if that gets taken out, very often major lows, when they're taken out, you look at the next major low, and then somewhere between the two is where you're looking at some kind of support. And that goes to 11,005, whatever the low was the week of December the 4th, 2015, between that low and the low that's made right here on the 23rd of 1173. Whoops, how can that be? We said 1170.1. Somewhere in between there is going to be absolutely critical. But wait a minute, what's the point of talking about gold if you've got the lead indicator, the dollar, which we're along from right there, along from, what was that, 90.07, yep, 90.07 on the 6th of April, trading at 96.79 right now, having hit a high of 96.98 in leg D. So the MACD is very strong and expanding in the daily. The stochastics at 94%. I mean, that is really strong. But if it turns down and goes under 80% in the next 10 days, that's very negative. Shorter term is very negative. And it'll be negative on the weekly. But I don't think that's going to happen. Why? Because when it looks like it is flattening out, and that's exactly what's happening here, the red line, the 26-period moving average is still, where are we? Right here. Sorry, I'm looking, yeah. So the 26-period on the MACD is still rallying, and the faster moving average, the green line, the 9-period differential, is still it's extraordinary. It's just straight up. And the histogram is very strong. And the stochastic is at 94%. Yes, the green line, the fast moving average, could turn down a little bit. But as long as that red line starts to flatten out in the mid-90s, that dollar is going to have tremendous support. So even on a negative case, unless there's a major give back of the last 3 days of trading, and yesterday was an aberration. Let's call it a move into halfway into that very strong candle of 4 days ago. It's 96.90, 95.90. I'm sorry. If there's a close below 95.90 in the next 2-3 days, I'd say, oh, okay, dollar, you've made your Chapman wave stalk leg formation. You've got the neck. Now you're going to start the beak. The beak should come and retest the breakout level. What was the breakout level that I spoke about for so long? 95.65, wasn't it? Yeah, 65. That should be somewhere in there, should be key support. Question in the den. Basil, can you look at dollar against gold back when it was 103 recently? Whoa, do I have that here available to me? Oh man, I've got it. Where do I have it? I especially took a chart that I could make where I could use an overlap. Oh, see above. Oh, you've got the chart there? Mike. No. Yeah. So, you know what? In the next break, if I can find the chart where I can overlay two charts so that you can see what we're talking about, Yeah, I'll do that. But if I go back to no, I have to go with this for the moment. I'm going with this Chapman wave stalk leg formation, leg in the weekly, body, the oval body, yellow, that's that yellow oval, a breakout above it. If the breakout is just modest, it just barely goes above and pulls back, that's very negative. If the stronger this neck line is, have a look at this. You can, in fact, have, I don't even want to talk about it. All right, I have to talk about it because we're talking technical analysis. It was a question that came up. You remember this one here, the very long oval body, and I drew in the Chapman wave stalk leg schematic. Well, what happened was it broke above that oval of 18,351. It went to a higher high. It went to 18,668 in August of 2016, and then it pulled back and it retested that high level, the 18,350s area, and then it broke out, and that then becomes the Chapman wave propeller shaft one-to-one explosion to the upside. But I still called it the neck because of the pattern that was unfolding as a long-term monthly pattern. So now let me go back to kind of your question in a way. Let me just say that the dollar DXY right now on the weekly basis, the MACD is very strong. Stochastics at 88%, hasn't even gone to the 90s yet. So I think that the dollar has a lot of support. If you look at the EUR, USD, look, it's the exact opposite. Ooh, leg D on the downside in the weekly chart. Yeah, it's getting close to some kind of a little bit of a bounce here in the daily. But wow, look at that monthly chart. It's gone below the high that was made in May of 2016 at 1.161. Trading right now at 1.1345, up just a fraction. I think it's getting close to a little bit of a bounce, but I would only say it's a bounce at this particular point. The yen, USD JPY. Yeah, look at that resistance, that very long-term resistance in the downtrend line of the US dollar Japanese yen currency pair. Peak F top back in June of 2015. I'll tell you that it's a 125.84, but that gets smoothed out as well. Plunges down to under 100. Pops up to 119s, and now it's trading at 110. And this apex, an apex can be very frustrating because it can keep restarting. It's just done that. Look, it looked like it was going to wrap up. No, it's just making it even smaller little range. So the yen hasn't actually rallied like it should. Not so good. TLT, we've got it. Oh man, we're already halfway through. Oh, all right, more than halfway through. Let's see on the upside in the TLT. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone, we're back. So I just wondered, Mike and the Den wondering about this. I think this is kind of the question that was being asked. And let me just do this. You see the red, that's the GLD, the gold ETF. There. So what we're looking at, the UUP, unfortunately, doesn't go back far enough. I could put the dollar in itself and gold, but I can't, on this particular chart, I don't think I can mix the two labels. So, but what I wanted to show you is that you see how gold hasn't broken down, but gold is making that lowercase h that goes to lowercase m. You remember, I just showed it to you in the 120-minute Dow chart. That suggests that at some point you should break the left side low, not by much, but you should break it and then come right back into this trading band. But look at the way the dollar's active. And what I normally say is that, look, how can I do this? I'll just use the pointer. There are times when the dollar and gold kind of go in the same direction, not the same percentages, just for about 4 weeks or so. Maybe it's even a little bit more. Every year there are a couple of periods where the dollar and gold are actually going in the same direction, although it's sometimes difficult to even tell, but they do in a little bit of, just directionally. But that's all. Look at this one here. Gold rallied. Dollar started to rally, but it's not for very long, and then it changes course. So all I'm saying to you is that if you look at this beigey green, whatever color this is, right here, khaki color, the way the tops are being made, it's suggesting very strongly, like this here, it's just suggesting that there is a chance that the dollar would want to move towards the top of the range. That is not 160. That is the price is based on the gold contract on the right. So just keep that in mind. But it looks like it wants to rally towards previous highs. It's looking very strong, and gold looks like it's just meandering. It's not. There's nothing there that's strong. It will get strong if at some point it breaks above all this nonsense and goes to 132. That's what I wanted to show you. All right, let's get out of that. Next question I had was EEM. What was the question? EEM in a bear market, then HG and copper. Okay, so let's just look at this quickly. The TLT, let me finish. The TLT is trying to test 121.22, the 200-period daily exponential moving average. If it breaks that, the magnet of 122.20s in the weekly chart will be there. And there should be really good support in the 120.50 to the 119.70 area. And now we're going to go to crude oil. Crude oil, if you look at it, is going, there it is pulling back down 2.27. It isn't pulling back. It is actually cascading lower from a peak C1, C2 in the Chapman wave back in 74, trading at 64 right now. And that 200-period moving average of 63.52 is now a magnet, and then it should dance around there. below and above and just start messing around. So we're getting close to some kind of supportive testing, but that's all it'll be, because that weekly chart suggests that there's a really good chance that sometime between now and September, the first week of September, 62.48 is going to be tested. And if it's broken, that changes crude oil's pattern completely, because that weekly peak D for August will really kick in as something to take seriously. And that's where the market might become a little more vulnerable, saying, hey, wait a minute, we've got wood, the global iShares Timber and Forestry ETF, breaking down from a peak E in the monthly chart. No, I shouldn't say breaking down, pulling back for the very first time with at 74.61 with 72.61 as key support. You've got high-grade copper. That was the next question. High-grade copper. High-grade copper right now, oh, down 11. Oh, my, look at this. Copper breaking down. Hey, this is nothing to take too lightly. I think that there's a chance that the shorter-term sell signals are going to be upgraded in the Qs very quickly. QQQ right now is, yeah, this is still just a sell signal. I haven't got a sell mode yet. By the end of the day, it might upgrade to a sell mode. And if you look at the IWM, which was holding well, now it's down, as I showed you earlier on, it's down quite a bit. So I was looking at that. Now, XEC. Question from Tim about XEC. You know, I'd say hold on. It's trading at 82.86, down 3.15. That monthly chart has this arch formation, and it said it should test the low that was made back in January of 2016 of 72.77. Whoa, wait, is that 72.7? Yes, 72.77. Let me just step back a minute. It's in Chapman Wave inside wedge diagonal trend line support target line. It has hit that and it's trying to bounce. If at any point it closes under 80, not only does the weekly chart, which is very weak technically right now, go even lower at 51%, I'm expecting that the weekly chart of XEC, Cimarex Energy, trading at 82.86, down 3.16, I'm suspecting that it's going to go down and walk its way down this monthly chart, Chapman Wave inside wedge support, resistance support, target line. And if it takes that out, it means it's going to be a quick run to the 72s. I'm just saying, let's go step by step. Let's see how it handles 80 to 79 support. I would not be going along this, but keep it in your mind that this at some point is going to have a really good rally. I'd much rather get it much lower down. Next question is, EEM. Is EEM in a bear market? Well, remember, I looked at the FXI and I said, no, I had a question from a subscriber or someone called in. When I look at the FXI, what did I think? I said, don't touch. If any country is going to be shaken up by the tariffs, taxes, and Turkey, this is going to be China. So I'm just saying, be real careful. I would not hurry to get into the FXI, which is the iShares China Large Cap ETF, especially since it's a large cap and it's acting very poorly. Oh, even if it made some kind of a base, trying to get back to the 41.34 and 200-period exponential moving average at it's trading at 40.48 now, 158 down, 3.74%. I would just say, yeah, that's going to become that whole area of 41 to 43 with the 200-period moving average, the 9-period moving average, that's the pink line, the 14, tremendous resistance. I don't think there's, and even if you miss it, big deal, it'll rally. You'll have plenty of time to get in for a much bigger move to the upside. Next question. CAT, lowest since October 17, Boeing, UTX. Yeah, let's look at CAT. Look, Caterpillar. Where did it go? I typed it onto the chart. No, type it into the little box there. Caterpillar trading right now down. Down 365. Looks like the FXI. At 131.28, it made a peak D, a 2-bar Chapman Wave reversal on the I forgot to put the date. On the 19th, the week of the 19th of January at 173.24. Chapman Wave 2-bar reversal. Next bar has a high of 173.10. I love those 14 cents in a major index, major stock. Peak D in the weekly chart, that goes to a down arrow. Yeah, be careful. Don't be in a rush on the industrials. This is not looking good. I suspect that the 128s will be 129 to 128 could be very strong support initially. Let's see how that holds. Now resistance is in the 136 to 137s. Boeing, what is Boeing down today? About 4 or something. Oh, down 8. Down in a leg D to the downside, peak D daily, peak D weekly. Oh, it went to an E. Sorry, it went to an E in the cup formation. This halfway into the cup, lip and base high means that it's going to retest the lows. I have a target for Boeing of 311 over the next 3 weeks. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So, yeah, we went to a leg F right under the 200-period moving average of the 2-minute E-mini chart. So just be a little careful. Let's watch what happens after this. Is very important. Only leg C in the 10-minute chart, but we're going to be watching that. So let's just do a quick wrap. I think I got almost all the questions. One question was a little bit too detailed. No, I actually did it. That was the world indexes. So I like to give my subscribers to my opening call Chapman wave methodology kind of test cases and studies. Sometimes I treat it as a trade. Sometimes I just want to do it as a separate thing because it's complicated. So the Chapman wave unconventional Chapman wave flat base restart, and a lot of words, but the words, those 1, 2, 3, 4, 5 words just exactly specify what the whole thing's about. And what it means is that there's a particular chart pattern that says that if I can identify it, in this case it was this peak D where it went to an E/A and then it went to pull back, it goes to an F/B and then pulls back even deeper. What the heck is all that about when it goes to a brand new high, it goes to a GC and then it goes to a D? Well, that explains the PPA is the This is the iShare, the Invesco Aerospace and Defense ETF. I had a target of 57.07. And that's it. No matter what happened, that's my target. It's actually below that, but I wanted the number, and the number is the left side low bar. And today we went to 57.21. We're getting real close. And again, it looks like a Chapman Wave Roman candle. Got to watch this one carefully. So I love to give exercise to my subscribers as well as positions that we're taking. And I talk about the tide, and that's it. Look at Amazon. Jeff sent me an email the other day saying, hey, it looks like Amazon just made a round number high at 1925. Yep, on the 13th. Now, this is one of the very few that's giving me, I don't know, spilkers. I don't know how to explain this. This is a B. There's no other way that I can count it. You don't fail at all-time highs in a leg B in the Chapman wave. So that says there's maybe residual strength in Amazon. I'm watching it closely because it's a leg D doji in the weekly chart, leg E in the monthly. I'm watching these very closely. Google, same thing. Google's still back a little deeper. Google's down 24 right now. Beta peak E at 12.73. I think that the bank stocks kind of vulnerable. Hey, stay tuned for, I think Steve is a recorded program. Stay tuned for Steve. Thank you for Dave Feich, for Tom O'Brien. I'll be back tomorrow on John clarinets and my tennis racket.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in